Let's dig into OpenAI and Microsoft relationship and speak with someone invested in one of its biggest competitors. We want to bring in Santosh Rao. He's the head of research at Manhattan Ventures Partners. It's a firm focused on pre-IPO companies and an investor in OpenAI competitor Anthropic. Santosh, my question to you is just in terms of what this could mean for funding, this back and forth. It seems like every week we're getting some sort of update on the relationship between Microsoft and OpenAI. How much does that matter for future funding?
Well, I think you're going to see a lot of this back and forth going on because this whole space is really developing. I mean, so these things is not out of the realm of possibilities. But I don't think, in the end, it's too huge a market, too important a technology to get it into their system, into their ecosystem. So there will be compromises, there will be some arrangement, but at the end of the day, you're going to see this because it's a high stakes game going on in the AI. So these kinds of battles do happen, especially in the initial stages that we are in. So let's see where it goes, but I don't see that as any limiting factor in terms of the growth of the space.
Are you alarmed at all by the rate of cash burn that you're seeing in the space, though?
Absolutely. I think that has become a big concern. The companies have invested a lot. There is no return on investment. I think that's become a big concern. Nobody's making money right now, except for Nvidia. So I think that's a huge issue in this AI space. Down the road, you will get that, but you need this massive investment. These are very expensive models that you need to feed and nurture and grow them. So it's going to take a while. In the end, it'll pay off, but initially it's going to require tremendous investment, which you're seeing. And investors are worried that is there enough return on all the investment that they're making?
What do you see as the revenue model, the monetization? Because for search, at least, people have been so accustomed to free search for decades now.
Yeah, so I think that's also taking shape now. We don't know yet what it'll exactly take, which form it'll take. I think subscription model makes sense, but at this point we don't know how you're going to monetize this whole space. But I think let's wait and see. I've heard different variations of how they will monetize in the end, but at this point, it looks like subscription might be the easy one. That's easy to call, but down the road, let's see. You have freemium models and this and that. There's so many ways you can go about it initially till you get people into the system. So let's see how it plays out, but it's still early days there.
Santosh, what does the IPO roadmap then look like for so many of these companies? We had the headlines out over the last 24 hours that after they rejected Google's takeover, Wiz, the cyber firm, saying that it's going to IPO when, quote, the stars align. What do you think that looks like for these companies that have been waiting on the sidelines?
Have been on the sidelines, yes. The IPO market is on hold. I think it's at the cusp of coming out. There's some limiting factors. The volatility is very high, so price discovery becomes a big issue for IPO companies. So I think you're going to wait and see the post-election. The number of companies waiting in the wings. In fact, the last I checked, there's some 200 plus companies that have not done a last funding round in the last 2 years, rather. So there is a need for companies. There's a lot of pent-up need to get out there and go public. The investors are also will get. I don't have any data on that, but will understandably get a little antsy on going out and getting their money back. So that's a huge issue for venture capital money. That money needs to come back. You need that return. So the exits have not been very wide, very deep. So we need that window to open wide. But I think in terms of timeline, looking at from today's vantage point, looks like 2025 has been, the timeline has got pushed out to 2025. Few companies will come out. Cerebras has come out. That'll be a very interesting tell on whether the market is ready for a company that's high growth, not profitable, but has tremendous momentum. It's in the right place at the right time, though it has some issues. Nvidia is, of course, the undisputed champ there, but there are some other companies coming up also in terms of inferencing and other areas. In the training side, of course, Nvidia is the leader, but on the inferencing side, there are a number of competitors in the niche markets that are coming up. So they will come up, a lot more competition coming up down the road. So 2025, in terms of the IPO market itself, I think 2025 looks like a sweet spot where everything, the election will be behind you, volatility will kind of hopefully subside, interest rate will have better clarity in terms of the economy. So it looks like the stage will be set in 2025.
But will it be healthy companies that we see going public, or will it be companies that feel pressure to go public because of the funding that they've taken on and some of those dollars that they've received? Well, depending upon where they came from, they might be in the ear saying, hey, we'd like to see some of that return realized right now.
I don't think the market's going to give any leeway for companies that are not profitable or are not close to profitability. I think we saw what happened last time. Number of investors got burnt. A lot of companies stumbled at the gate that were high growth, no profits, profits in the future, way in the future, things like that. So all those companies got punished. So pretty much it became like almost a necessity that you had to have a solid business model and not too many doubts. So the investors gave you the benefit of doubt, but only up to a certain point. So I think